Hello everyone. My name is Richard Wilson, and today I'm going to talk about the 4 core drivers of family office industry growth. And really, my experience in family offices has been somewhat unique. Most of my experience has been on the hedge fund side of the industry. And really, I started out in the industry by raising capital from angel investors who sometimes happen to be family offices or part of a family office. But then on the hedge fund side, I was in charge of raising capital for a $800 million fund-to-fund and a couple emerging manager hedge funds. And my job was basically to raise capital in any way I could. And for a long time, I didn't raise any capital. I was going after the wrong types of investors. Kind of by chance, I started working with a couple of smaller family offices, found some success there. And since then, over the past 5-7 years, I've been really focused on family offices and how they work with hedge fund managers. The hedge fund book up there is a book I wrote last year for Wiley, where I interviewed 24 different hedge fund experts, and the transcripts of those interviews are within the book. So it's kind of like sitting down for a coffee meeting with 24 different hedge fund people. And right now, actually, in the last 4 weeks, I've recorded 36 audio interviews over the phone with family offices from here in Brazil, as well as Canada, Israel, Dubai, Australia, Singapore, many different areas around the world, all focused on how family offices are deploying capital. So many people in here are experts at family office services or growing a family office business or the trust estate side. My expertise is that small sliver of how family offices deploy capital, and very specifically on how they do that to individual fund managers and how that process works. I run a family office association, which is much different than some of the other associations you've heard of in the industry. Ours is open, it's free to join. I struggled to learn a lot about this industry and couldn't find a single website I didn't have to pay a large subscription fee to learn anything. And so our website has 3,000 articles that anyone in the world can access on family offices. And that's kind of been the growth of our 25,000 person association, just through our familyofficesgroup.com website. I think that's important to know before I start, because I've kind of had to learn things from ground zero. I didn't go into working for a family office straight out of school or anything like that. I was really starting from just working in the hedge fund industry. So today what I cover is, over the past 7 years, how I've seen the family office industry growing. And specifically, over the past 4 weeks, while interviewing 36 different family offices, including 6 or 7 of the top 50 family offices in the world, with billions of dollars in assets, how exactly I see the industry kind of evolving and growing right now. The 4 ways, or the first way is actually multifamily offices lowering minimums. We've heard here today about regulations increasing on family offices, specifically multifamily offices. And as a result, many of the family offices I'm speaking with have lowered their minimums for coming into their fold from, say, 50 million or 100 million. Some of them have lowered those minimums down to just 20 million or $30 million. There's obviously some groups going the other way who want to only work with the largest of families because they've had success in the past. But what I have seen is some mid-sized multifamily offices lowering their minimums. And I think they're doing that to get more economies of scale. Once they have a compliance infrastructure in place and they have the generalist expert that people are speaking about here today that might cost 6-7 figures in place, they can leverage that to some degree by bringing more families into the structure. So that's part of, I think, why this is happening. And something I found around the world, in Australia, in Zurich, where I just came straight from there, from a family office conference, actually in Pathicon, as well as the United States, where I'm originally from, is that talent is the kind of bottleneck in the industry. Many family offices, they could grow much faster than they are, but they know that referrals is how most of their business comes in at the end of the day. And if they don't have the right talent in place, then something is going to suffer as a result. So again, as we've heard other times within this conference, talent is one of the things that's really slowing down the growth of the industry. The number 2 growth factor I've seen is wealth management firms firms raising their minimums and calling themselves a family office. Many people, especially those that focus on working with single family offices, would call some of these firms not a family office at all, and at some degree, you're right. But I think everyone agrees there's some gray area. Many people now agree that the family office industry is a quote-unquote industry, but the definition of a family office is cloudy. Many times, what I've been finding is that lots of wealth management firms that have found a lot of success in the past, they want the cachet of calling themselves a family office. They'd like to have a more profitable business and work with larger clients. So they might only have 3 or 4 $20 million plus or $50 million plus clients out of 100, but they put on the tagline of family office on their name, and it does a few things. It confuses some people. It makes the industry look a little bit bigger than it is in terms of statistics of the number of family offices out there or multifamily offices. But it's also growing the industry because it's educating those that are maybe on the verge of being large enough to be served by a multifamily office, and these groups are kind of filling that void. So some people are a bit frustrated by the fact that some people call themselves a family office when perhaps they are, perhaps they're not. But this is one area that I think is growing the industry. And there are some legitimately really well-run family offices, specifically in Switzerland, that I know of, that really emerged out of just being a traditional wealth management firm. So this isn't all marketing. I think wealth management firms can convert to multifamily offices just as single family offices try to convert to multifamily offices as well. The third source, which I think is probably most interesting, is just the rising of global wealth around the world and the awareness of the term family office and what it means as a concept. So being here in Brazil today, I think is a great place to be talking about this and the things that are growing the industry, because for example, in China, they sell more Ferraris than anywhere else in the world. And everybody hears about China, China, China. And Brazil is right up there with India next on the list. But I think what's most interesting about this are places that you don't really hear about too often. For example, Indonesia, Nigeria, Malaysia. There's many family offices that I've spoken with who talk about walking into a manufacturing plant in Malaysia and coming out with a contract to manage $30 million worth of wealth for the business owner who runs that manufacturing plant. Many examples like that in countries where, if you watch CNBC or Bloomberg, or here in Brazil, the Global News Channel, and you watch a business segment, it's not very often that Malaysia comes up as a source of leading global wealth, but around the world, there is more ultra-high net worth people being created right now than ever before. And even though times might be volatile and there's lots of people being scared and unsure about what to invest in due to debt concerns and monetary concerns, at the end of the day, that just increases, I think, the demand for family offices. The great thing that I found about both the hedge fund industry and the family office industry is that while the amount of time somebody might take to make a decision of who to trust their assets with could be longer in a volatile marketplace, the overall demand for the skills of a family office or the skills of a fund manager really increase. The more volatile things get, the more quote-unquote scary things get in the marketplace, the more unpredictable things get, and the more economists that I listen to, the more convinced I am that, especially within traditionally called first world countries, things aren't going to be nearly as predictable as they used to be. So I think that this is leading to a big growth in the need for family offices. In good times, everybody's a great stock picker. Everybody is a good fund manager. And the last 3 years, we've seen that that's not always the case, and that it's kind of separated the good from the great in many cases. In terms of global family office awareness, I was speaking with, I think it was Mauricio during one of the breaks, and I think that what's happening is that there's this parallel with the hedge fund industry, where I come from really, in that about 10 years ago, 12 years ago, hedge funds started to make headlines a bit more often. And even now, hedge funds are misunderstood and sometimes marred by the press, most of the times marred by the press. But for better or worse, they're in the eye of the general public now. Most people have heard of a hedge fund, the general public, and at least a percentage, 20 or 30%, might actually somewhat understand what a hedge fund does, depending on where you're at. But family offices, on the other hand, within the finance industry even, and even within the hedge fund industry, many people don't yet really understand what a family office does. And I think that's pretty interesting. But many people do. There's some that don't, but many people do. And in the general public, I find it's a very small percentage of people who understand exactly what a family office does. And some could argue that that doesn't really matter because it's only the ultra high net worth who really need to know what a family office does. And it's a good point, but I think that there are many business owners that are approaching or have net worth of over 20, 30, $50 million and could use the services of a multifamily office, but maybe they haven't divested from their business or sold some stock shares, so they don't even know that this option exists, or they barely know about it. They're not really comfortable with the concept. So the parallel with the hedge fund industry is that I feel like right now it's a pretty exciting time for all four of these reasons I'm going over today. But just the awareness of family offices, it's coming in the headlines more. Unfortunately, many of the times it does is again associated with frauds and negative things, like Madoff scandal. Some family offices and very wealthy families got burned over that. So, but I definitely think that family offices are just going to become more and more prevalent and more well known, and the general public's going to become more and more educated about them, and that's just going to bring naturally more ultra high net worth people kind of out of the woodwork who otherwise might hold on to securities in their own company or might not divest one of their 5 operating companies. Once they get familiar with the family office and are comfortable with it and know it's out there, they might want to go and meet with someone like yourselves and maybe get out of one of their businesses that has a bit more legal liability, or for some other reason, divest and trust somebody with managing some of those assets. And I think that these two things combined are what's driving a lot of the growth in the industry around the world, including here in Brazil. And the final reason I think has just been the long-term growth leader in the industry has just been kind of releasing the handcuffs of private bankers and trust professionals. This is really talking about the trend of people leaving a well-known, respected private bank that has most institutional processes in place possible, but maybe they're not quite open architecture, or maybe their hands are tied in their cash management tools, or their fund manager selection process takes very long and you're not even able to consider certain types of fund managers. Many of the family offices that I've spoken with lately over the past 5 to 7 years have been CPAs or individuals that came directly out of private banks and trusts. And I think that most of the time the scenario is that the private bank or trust attracts naturally the ultra high net worth individuals in that community, and they have a great reputation. Over time, over a few years, the patriarch of what will become a family office grows a great relationship with a private bank or trust employee. They trust them individually with being responsible for their assets and listening to their needs and serving them well, but the bank or the trust gets in the way of doing that. They're not able to allocate to the CTA manager they want to. They're not able to use more advanced cash management techniques. They're not able to easily use an outside service provider and invest in multifamily real estate or apartment buildings. There's multiple things that just frustrate the person that has 50 or 100 million or more in assets. And what I found is that that person basically makes the trust employee an offer they can't refuse, something at 7 figures, maybe with a carried interest, or other details we were speaking about earlier today, and goes out and forms their own family office. One interesting thing about this is that many times when I read white papers and articles in the industry, everyone says, you need to have 200 million or 300 million in assets to start a single family office, or you can't really do it otherwise. But what's interesting is I found many successful single family offices that are only at 50 million or 100 million, and they could just be anomalies and my relationships aren't statistically significant. That could be the case, but I'm also finding that many times single family offices at least are so deeply entrenched in their operational business that they either want to maintain a lot of the control internally and invest within a specific industry and be a little bit less diversified than a multifamily office. Or I find that many times the tax efficiency and cash management advantages that just one or two highly skilled kind of generalist experts can bring to the table can pay for the cost of running that single family office alone. I found that many times with just $50 million under management, just the fund manager selection and cash management benefits of having one person dedicated to watching their specific needs and risks alone can pay for that one person. And some single family offices that I've spoken to are a little bit frustrated that they go to conferences and they speak, and people come up to them and say, well, you can't really be running a single family office with less than 200 million under management. That's not possible. You must be losing money, or you're missing out on X, Y, Z. And they get a bit frustrated. I say, well, for me, it does work. And for me, here are the numbers, and it works great compared to what I was doing before. And that could be working with a multifamily office. So this is something that kind of goes against industry statistics, or I think what many people read about in the industry. So I thought it'd be an interesting point to bring up here. Another thing that I found is that many private banks, and maybe it's because my focus and background is on hedge funds, but many private banks and trusts have very lengthy and very just very burdensome due diligence processes when it comes to fund managers. Many family offices I speak with care a lot more about the team behind a fund rather than the number of years in a track record. Yet many times in private bank and trust company, the group not only has to have 100 million plus, 300 million plus in assets, but they have to have a 4-year, 5-year, 7-year track record, where many times somebody might come out of one of the top global hedge fund shops, open up a new fund, have the right incentives and long-term rewards in place for the key executives in the hedge fund, and have track records at other places. And many times family offices are investing in those types of fund managers. Yet at private banks and trust companies, many times those types of funds are missed out on because they want to wait and see. They want to see what happens, see the track record, and they do that for obvious reasons. But I think that could be a frustration for those who really do want access to best-in-class managers, because oftentimes if you wait too long, the fund might be closed, or that same opportunity might not be available. There was one case specifically from someone I was speaking with based in Zurich, and they were with a wealth management private banking group that basically had the cash management options limited to just two or three different options. And their investments, basically, if they wanted to stay inside that private bank and not incur a lot of extra costs, had to be in very liquid funds, and they wanted access to more real estate type structures. And so they actually moved the person out from the private bank or the trust company and formed their own family office. And again, they're not at the 300 million range, but the family office has worked out very well for them as a solution. So I see this as really, something that I guess a little bit obvious of why the family office industry was kind of exists today, and it's not just an arcane niche within wealth management, but really is an industry on its own because of all these needs. The reason why a generalist or generalist expert is paid so much is because family offices want access to a comprehensive, full balance sheet, 360-degree financial solution, and you just can't get that, I think, within a ton of bureaucracy and a 42-step due diligence process that worries a bit more about headline risk and some business operational risks and efficiencies in a very large institution versus someone who's focused exclusively on serving the needs of an ultra high net worth individual above all else. And I think this was summed up by many family offices that I've been speaking with recently in terms of their mission in serving the family. Many of them have turned down a lot of business and will turn down opportunities and will turn down opportunities to share in fees for the betterment of the individuals and the families that they're serving. Well, many times that doesn't happen within the private banking and trust area. Many times the private bank could be sharing in fees or have managers associated with their platform, so they're incentivized to provide a product to their clients that benefits them more instead of looking out for their clients first. So that's been one of the leading sources of growth that I've identified recently. The final thing I wanted to talk about here is just some trends that I've kind of found by accident recently with family offices. A couple of them are obvious, and a couple of them are not obvious at all. One of them here I've covered is the hedge fund industry parallel in terms of just the term family office and how well it's known to the general public and to the people who actually use a family office, ultra high net worth people. The one that I think is most surprising is just the amount of M&A activity that's going on and I think is about to go on. Many of the top 10, top 25 family offices that I know and have relationships, such as Baker Street Advisors and Threshold Group and Constellation Advisors and McCarr Family Office, many of those types of groups that I've recently been speaking with, realize that if you really do want to move away from having one seven-figure generalist and then outsourcing everything else, the next level is getting the 7 different seven-figure experts on your team, or it's getting an expert in global taxation as well as a generalist who's managing the whole team, but have the global expert in taxation, have a global expert in real estate, or someone who's an expert in commercial real estate, have the expert in fund manager selection that you might lift out of a leading institutional consulting firm, and just choose the 5 areas or 7 areas that for your types of clients, which might be different based on their generation, that you're meeting those 5 or 7 key areas of value add, basically. And so basically it's kind of either or, like either, what I'm seeing is that either you have one generalist and then you have a few people supporting him and then you outsource some things, or if you really want to be, I think, a top tier kind of institutional A player in the multifamily office space, it means having all of that institutional ability in-house. And the cost to go from that first model to the second model is enormous. You're probably looking at 10 times the cost of running the multifamily office. And because of that, the amount of assets needed to do that, when obviously you're just charging on the base of assets and nobody charges really performance fees in the industry, is enormous. And so what I found is that many of the largest family offices I'm speaking with either have plans to, not specifically the ones I just mentioned, and I don't speak for them and I'm not affiliated with them in any way, so I don't want to give the wrong impression, but many of the larger family offices are looking at organic growth versus buying out some of their competitors. And I thought that was interesting because so much of the family office industry is based on referrals, and the complex nature of combining the unique offering of one family office with another, it'd be very challenging. I can only imagine. I haven't been involved in an M&A deal, but I think it'd be more complex than combining 2 wealth management firms. And I think that I think it's a trend that we're going to see more and more of. I think as the industry grows and people realize that with their 50 million in assets, they could work with someone who has 1 7-figure person in-house or 7, and that group that has 7 in-house, they could also access those outside experts if they really do need somebody who has apartment, multifamily, commercial real estate expertise in Singapore. Then they could go to that same outside expert, the smaller multifamily offices. There's nothing stopping them from doing that, but they also can pass a note across the desk or walk 10 feet down the hall and access that expertise instead of calling 10 hours ahead to a different time zone in Singapore and hoping that the service provider continues to partner with you in a timely manner. I think at the end of the day, if you have enough assets, you want to be working with the A-player institutional quality offering that has as much expertise in-house as possible. At some level, you can't have every type of expert in-house. It's just not, you can't do that. But the level of competition in the industry is increasing at such a rate that this is what some people are aiming for right now. So in Brazil, it's different than Singapore, which is different than Zurich, which is different than the United States, obviously. So there's different levels of competition. I haven't heard of someone in Brazil taking this aggressive of an approach with M&A activity and trying to have that many big experts in-house. But I think it's only a matter of time. And one other interesting thing I found through my personal experience in terms of statistics is that, as somebody mentioned here early today on the numbers in the industry, that they're completely off, and I completely agree. With hedge funds, everyone says there's 10,000. In reality, there's well over 20,000 or 25,000 in the world. Most of them just don't bother to register with a database because those databases are Western world centric. And you know, if you're a whale and you don't want to get harpooned, then maybe you don't want to be in every database around the world and on every newspaper. So that's something I found was pretty interesting. And the parallel with family offices is that many people say there are 3,000 family offices in the United States, maybe 5,000 globally, are statistics I hear over and over again. My experience is that in the United States alone, there's well over 5,000. Globally, I think it's around 10,000. And even though I put M&A activity up here, I think that the A players are going to be absorbing other A minus B plus players. They're not going to be absorbing the huge number of volume of smaller to mid-sized family offices. So I think in 10 years there'll be 17,000, 20,000 family offices. I think that the trend is not going to slow down for all the reasons I've talked about here today. A few hot spots around the world for family offices. I know we have a few people here from Chicago and New York, and there's a lot of old money in places like San Francisco and Boston. So the United States overall has a huge amount of ultra-high net worth individuals, but I think most people know that, and I have London up here. Most people know there's a lot of wealth base there and a lot of family office activity. But some of these other areas I just want to bring up, just because I think they're interesting, especially I just want to focus on Singapore here. What I found is that in Asia, basically, if you are worth over $10 million or $20 million, you've at least considered where that money should be based or where your investment should be based outside your country for tax efficiency reasons. And in the past, the choice has been Hong Kong a lot of the time, unless you're going to go to some Western world-centric tiny rock in the ocean type location, or go to Luxembourg or Switzerland. And so what I find is that everybody in Asia who used to go to Hong Kong many times are considering Singapore, because Hong Kong, generally the tax rates are between 12 and 14%. Singapore is 9 to 11%. In Japan, I spoke at a conference there just a few months ago, and most people in Tokyo and Japan who want to set up a fund or a family office are doing so in Singapore. Again, in Japan, it can take 14 months to open a fund. In Singapore, it takes 4 to 6 weeks. Most of the people who are making a lot of money in China are looking at different options on the list right here. And Singapore has a geographical proximity that most other places on this list don't have. So even though Hong Kong is bigger than Singapore right now, Singapore has added 600,000 people to their population in the past year and a half, and 1 out of 5 people in Singapore is a millionaire. So it's a great location to be. Monaco's on this list, but to run a business out of Monaco is relatively painful, even though taxes pretty much don't exist if you're not running a business there. And real estate is pretty painful there as well. So to summarize, what I've found while both interviewing family offices around the world and traveling around the world for conferences such as this is that some of the biggest hotspots include the places you'd expect, but Singapore is really standing out as the fastest growing hotspot in the world for family offices, just because of the enormous amount of wealth being created within Indonesia, Malaysia, and the rest of Asia. If you have any questions, here's my email address. It's richard@hedgefundgroup.org. We actually have 2 full-time employees here in Sao Paulo, Brazil, and 5 employees in Portland, Oregon, the United States. And one thing I kind of skipped over at the beginning is that my role right now with my background in hedge funds and working with family offices is really in providing institutional quality, best-of-breed fund managers to family offices, and I have a laser focus on serving family offices. So I don't meet with pension funds, I don't meet with endowment funds or foundations or high net worth individuals. I only work with family offices because I think that they have unique needs as investors and they look for different things in fund managers. So we have like 1 or 2 minutes left right now, actually, if anybody has a question about anything that I've talked about here today.